Hello everyone. This is the pre-market report video for today, January 19th, 2023 in the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's have a look at what happened on Indian market yesterday. Nifty opened relatively flat, 20 points gap up, and it moved upwards throughout the morning. However, the flat opening of the European market put a halt to the Nifty's rally, causing it to hit resistance at around 18,150 to 18,170, and that range was maintained for the rest of yesterday. One of the main positivity from yesterday was that the Bank of Japan kept the interest rate same as negative 0.1%. This made the Japanese index to rally over 2.5%, and thus it also positively impacted on the Indian market as well. Sector wise, again for the second consecutive day, except PSU banks, all others closed positive. However, FIIs again turned net sellers. They net sold shares worth approximately 320 crore rupees. And again, as expected, DIs supported the market and they net bought shares worth approximately 1225 crore rupees. Then, after our market hours, all European markets opened flat and closed flat. Please have a look at the German's major index. It opened flat. It moved upwards, but in the end, due to US market influence, it closed flat. Then coming to US market, last night it was a bit of a depressing day. S&P 500 opened slightly positive, but the released back-to-back macros kind of increased the worries among the investors and pushed it downwards throughout the day. First, let's see the one positive data that released yesterday. Just after the US market opening, 30 minutes after, US Labor Department released the Producer Price Index data for the December month. We can't call it as exactly the wholesale inflation, but it's close. It's the cost that manufacturers produce. It comes as 6.2% against expectation of 6.8%, and it is significantly less compared to November month, which was 7.3%. This was positive, really a good data. Now the negative ones, retail sales data. As we all know, December month is and was always a holiday month with a gift season. Despite that, on month-on-month basis, retail sales contracted over 1.1% against expectation of negative 0.8%. Along with this, Microsoft made the announcement that they are going to reduce near 10,000 jobs. This kind of increased the recession fear over inflation fear. Additionally, 2 hours before their market closing, Federal Reserve released the Beige Book. This is completely new for me. Today only I heard about this Beige Book for the first time. Apparently, it was a custom for the Federal Reserve to release the Beige Book just 2 weeks before the interest rate decision. So, this book will tell the present status of the US economy as a whole and state-wise. As a rule of thumb, this book data has to be used in the FOMC meeting for interest rate decision. In that, except New York, all other states indicated that their economy was fairly stable. Already, investors were having the recession fear. This Beige Book increased the interest rate fear as well. Because of all these, in the end, Dow Jones was down by 1.81%, S&P 500 was down by 1.56%, and Nasdaq decreased by 1.24%. Even US VIX increased over 5%. Almost all the tech stocks except Google all closed negative. Tech stocks was only marginally down since this recession fear also made the 10-year Treasury bond yield to down by almost 5% to around 3.37%. However, dollar index was almost the same, around 1 or 2. In terms of oil price, at the time of this video, WTI crude oil was traded near 79 US dollars per barrel and Brent crude oil was traded near 84.5 US dollars per barrel. However, Indian areas in US market just followed the Indian market. Both IT and banks ADR closed significantly positive. Then regarding SX Nifty, at present at 3 am Indian Standard Time, it closed at 18,139 mark and Nifty futures closed at 18,141. And because of that, I guess it's showing the gap down opening of around 60 to 80 points. So that's all about what happened on global market. Now let's discuss the India related info. Coming to stock and sector specific, first one, Reliance. Because of this oil price drop, it's clearly negative for the stock. However, the stock was already down over 4% in last 1 week and 10% from its recent peak. And there are some positive news about windfall tax and etc., which were not at all materialized on the stock price. Tomorrow, there is a schedule for release of its Q3 quarterly earnings. So either today or tomorrow, we can expect some short covering. Then about banks, yesterday in the aftermarket hours, IndusInd Bank released their Q3 earnings. I mean, on year-on-year basis for December quarter, analysts expect and estimates their net profit to increase over 47% and it increased over 67%. Clearly, it beats the street estimation, but it doesn't mean it will make the stock to trade positive. Since even HDFC Bank did deliver the positive results, still on the following Monday, it did closed negative. Then the third item I like to highlight is that Maruti Suzuki made the recall of over 17,000 vehicles to fix its faulty airbag. This is clearly not good for that stock. Also, ICRA rating mentioned that the Indian automotive industry to grow only by high single digit in FY24. I personally think any industry in India less than double digit growth is always negative for that sector. So, as a summary, there was a negative momentum at the global level based on the US market and SX Nifty close. However, Indian areas were signaling positive. Also, I believe yesterday's IndusInd Bank quarterly results and expectation of short covering in Reliance might provide some support. As I said earlier, oil price, dollar index and 10-year treasury bond yield all are good. Now coming to technical, Nifty forms a long bullish candle on the daily chart, making higher high, higher low formation for the fourth consecutive session, indicating a potential upward breakout. It seems market have reversed after a small pull down rally. Further strengthening could push Nifty further up to the high of 18,300 level in the short term. However, if the market falls below 18,000 this week, it may be a sign of a false rally. As for the Bank Nifty, it has formed a short bullish candle following a bullish Harami cross reversal candle. However, it is still trading within the large candle that it formed on January 10th. Therefore, any potential trend can only be determined if it breaks above or below the January 10th candle. For example, if the Bank Nifty crosses above 42,800, it may indicate more upside potential. But if it falls below 41,700, it may indicate more downside potential. Then on daily chart for Nifty regarding moving averages, on Monday it closed below the 5, 10, 20, 50 and even 100-day moving averages. So as a summary, making it as a sell signal. However, on Tuesday, it improved to a buy signal. Then yesterday, it closed above almost all the moving averages except the 50-day simple moving average. So as a summary, it changes from buy signal to strong buy signal. In terms of technical indicator, only MACD and rate of change are still indicating the sell signal. And even RSI value has improved from 48 to 42. Thus, as a summary, it too improved from sell to buy. In case of Bank Nifty, the summary is not as good as Nifty. For example, in case of moving averages summary, it improved from neutral to buy signal. Regarding technical indicator summary, it's the same sell signal. On the positive side, now the RSI value improved from 46.5 to 48.5. From option change in open interest, some call option open interest unwinding took place at 17,900 and 18,100 levels. Additionally, significant number of new put options were added between 18,000 and 18,100. Thus, 18,100 is the immediate support and 18,000 is the strong support for today. Based on overall options interest, there are still some short straddle positions present between 18,000 and 18,100 and the nearby maximum call option open interest is present at 18,300 level. So 18,300 is the strong resistance. In case of Bank Nifty, the story is similar. From 42,000 to 43,000, significant call options has been unwinded and more new put options were added at below 42,500. Based on overall open interest, 42,500 has significant short straddle positions. 42,000 is the support to watch out for and 43,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.